let's look at what happened this week, the week of the 1st through the 5th. And so last week I definitely wanted to see how price was going to work through this. And so how it worked through it was it consolidated. What some may call a channel, but price crept its way through, picking up liquidity and dealing it off from this level right here, from these levels. So I wanted to see how price would respond, because I expected price to move higher based off the weekly time frame. And so as you can see, price, it picked up, it came here. Let me move this out the way. So I wanted to see if price will respond here. So price responded here Sunday, and it came to this base. This base pushed us above these levels here. So this base is in control of the buy momentum, right? So it's in control of the buy side liquidity. So price came back down to this level, picked it up, and it started working its way through these levels here. So now this level, this pickup is in control of the buy side relative to the time frames and stuff like that. So what I want to see now for next week, let me get this up. What I want to see, I have marked this level here, mainly because it broke us below this level. Okay, but price responded here. I responded at these highs right here. So I want to see on a lower time frame how that looks, right? So as you can see, okay, so price responded here, price responded here, and this level responded here, and this level responded here. So let's say came to pick up something here. I'm not sure if we'll be able to see it, but right. So on the lower time frames, because I do not have the data subscription for TradeOvate. Not TradeOvate. I don't have the data subscription for TradingView right now to go back far enough. I probably could on TradeOvate, actually. Maybe that's why I mentioned it. But I'm not going to do that for the sake of this video. But pretty much price, when this move happened, it picked up some liquidity from here. People in ICT circles may call this a fair value gap, but as I explained in other videos, it's usually a pocket of liquidity somewhere on the lower time frame, all the way down to the tick or second chart. Like, even if you can't see it, you could probably go to a minute chart and it'll still look like it's a gap. But if you go to a tick chart or a second chart, you'll see that it's some accumulation on a very, very smaller time frame. Okay, so it's not just a random gap, because if that was the case, price will respond to any gap. There's a reason why price responds to the level it responds to. Apparently, right? Because it's all apparently a reason. It's all apparently happening, right? But even though I had wanted to see price do this, I still blew an account because I wanted to see price continue to push higher. So like around these levels here, I wanted to see price push higher. So I'm in trades. I'm in trades around these levels. I don't know specifically, but I do remember around here, because when I saw this, I'm like, wow, you know. But like around these areas, I wanted to see price continue, but it kept dropping to pick up more liquidity. So it had to pick up some bids, because at this level here, when price extends, right? When price is extending, it's extending and it's becoming weaker. The further price moves, the weaker it gets. So it's extending into levels of liquidity. So weakness into strength. And once it did that, the continuation, it was a lower probability of price continuing. So it had to come back and grab more liquidity. And then it started to, because once it picked up this liquidity, I forgot to mention, it's going to deal it off. So it picked up liquidity, dealt it off, and offset it against this momentum here. And once it picked up the liquidity here, then it was able to push higher. But I was over leveraging and I wanted to see price continue. So that's the illusion of control when it comes to trading. There is no control. There is only price. There is only movement. There's only energy. Right? And so this idea of knowing or predicting or this tool being a use to help me understand what price is doing, it's an illusion. It's illusory. But once awareness is there, what price is doing or apparently doing is revealed. I had no idea I would come across ICT in 2026. I said 2026. Listen, I'm tired, okay? I am sleepy, tired. But I had no idea I would come across ICT in 2022. I had no idea ICT would mention Chris Laurie. I had no idea I was going to join Chris Laurie's community. These are things that just happen. Same with the market. So even my understanding of price action is just happening, apparently. But apparently I'm going to expect price, the way that it's structured here. So price picked up this level right here, this base, right? And so it extended into this level here. It extended. And extended to this high. Responded. And it came down here. Maybe I can look here. So it extended. The extension field came back to around here. Pocket of liquidity right here. And now it is in a lower liquidity state. So it's in a consolidated fashion because you have liquidity coming in on both sides. So it's going to stabilize itself, which is price stability, which is what you see right here. Consolidation, what people call choppy price action, is just stable liquidity. Liquidity is stabilized. Both sides have equal amounts of liquidity coming in, and eventually price will extend out of the consolidation. Rather, it doesn't necessarily mean that it's more buyers or sellers. It can be buyers dropped off And it's still the same amount of sellers, or sellers dropped off and it's still the same amount of buyers. So it doesn't necessarily mean more buyers came in or more sellers came in, but at some point the stability of price, because price action is not constant, it's never in a constant state, eventually is going to extend out of whatever consolidated fashion. Either it's going to go higher or it's going to go lower, but it always happens. And so I will want to see how price extends out of this consolidated fashion. Of course, higher time frame, I'm looking for price to reach these levels ultimately. So that's ultimately where I'm at. And then once it reaches these levels, then we'll see how it responds. If it just breaks through because there's not enough liquidity at these levels, or if it gives a significant response and then continues, we'll just have to see. It'll happen. And it'll happen without any sentiment. There can be sentiment or not, but whatever happens will happen. So let's see. So I almost forgot to talk about gold. So if we go to a 4-hour chart, we can see price made all-time highs, pushed lower. It came to this base here. Once it came to this base, price formed a base here. So picked up liquidity from here. Once it came down, it responded, picked up liquidity here, came back down, picked up the rest of the liquidity that was here, went back up to the other side of this fractal, dealt that off, picked up the rest of the liquidity from this level here. So let's say this level here. Then it dealt off, pushed higher. It even responded here, right? It even responded here. There was still some liquidity remaining. So this is a 4-hour chart. So this was a decent trade on a lower time frame, right? It's not all about these big moves. And so you can see price responded there and then responded, picked up liquidity from this base, pushed higher and responded ever so slightly to this level. It actually didn't come. If you can look at, it didn't come, let me see. It didn't come to the bottom of this fractal, right? But I'm pretty sure there is a pocket of liquidity below this level, okay? So remember when I said price will consolidate, accumulate, and extend either way. So that's what it did here. That's what it did here. That's what it always does, right? And so when price came up here, picked up whatever liquidity was remaining up below this level, dealt that off and came back to this level here, right? And going down to a lower time frame, we can see why this level specifically, because, well, you may say, well, why didn't price come back down here? There's a reason for that, apparently. There's apparently a reason for that, which I will not get into in this video, but price came back down here, pushed higher. People call this a fair value gap. Let's see. Let's see. So we got, let me mark this first. Can we see it on a 15? Yes, we can. Look at this. Look at this level right here. You see how it looks like, oh, go back. You see how it just looks like it's two candles right here? You have this candle and then this candle. On the lower time frame, a candle, these are multiple candles. Price came to a level right here, responded and went up and picked up liquidity that broke us below this swing. You see what I'm saying? So it happens all the time. It just, when you have a deeper understanding of price, you can break down what's going on and you can take advantage of the different elements, the different parameters, the different methodologies, because your understanding is very deep. It's not just patterns, it's actual behavior, right? You're not trading trend lines or patterns or using some system, and there's nothing wrong or right about any of that, right? I'm just speaking from another perspective. So without trading from those systems, ICT, support resistance, whatever, it's definitely I would say more advanced or more sophisticated way of understanding price action by itself. No indicators. You can use indicators, but just straight naked charts, right? So for gold, it's looking like it wants to either pick up. So it's here, okay? Either it's gonna push higher or it's gonna push lower. Okay. And so just have to see how this all plays out, because this is the current swing. This low and this high price has to work its way through whatever liquidity is on this leg right here. And so when we see how that shapes out, it's not really about having a bias, because when you're able to track liquidity, you don't need a bias. And so we'll see how gold shapes out. Let's take a look at S&P too. Those who trade S&P. And so of course it's gonna look like NASDAQ. So overall, actually, let's see. Now that I look at it, from a S&P standpoint, it does look like price may drop. It may drop some more before going higher. Looking at NASDAQ, how it closed, you see it closed, well, it's a 4-hour. The daily is bullish or moderately bullish, because this is really, it's ambiguous. This is a candle that's halfway bullish, halfway bearish. So it could go either way. Okay. And so, but on a 4-hour, let's say, if you're looking at a 4-hour, it looks like price wants to push down. 1 hour, obviously it looks different. It's gonna look different on every level, but it's still fractal nature. So S&P, obviously I want it to continue higher, but I want to see what it does as it continues higher. So it continued higher here, and a not even bleedy, just, I have to remember the term. I can't remember the term right now, but it definitely chopped its way up. We usually call that bleeding over at the community where I learned how to trade from. But this, I don't think this is bleeding. It depends. So I'll have to figure that out another time. And so if we look at US 30 futures is Dow Jones. I actually like this price action on Dow Jones right here. So let's see, let's zoom out. So you have all-time highs, price came down, picked up liquidity from here, which picked up liquidity from, you can say, this entire base right. And so this move up excuse me, this move up needs to maintain. So we'll see. It already responded up here. It already responded here. So we have to see what this level does. So you have this move up that needs to maintain if price breaks. So if price comes down and then breaks that level, it's going to reach to other levels of liquidity, and we have to see how it responds to it, right? So I don't know, I just like this price action the way it looks. Price extended from here. It's clean for me for some reason. It just looks clean. So price extended, filled the extension, and now this leg is has filled and responded to this base up here. So we're gonna see if it comes down. I'm gonna actually look at Dow Jones this week because I haven't been I really don't trade Dow Jones, but I actually like the way this looks. It looks clean. So for me, Dow Jones, possibly looking for shorts because of where it's at. ES, I really don't trade it, but just looking at it, looking for shorts. NQ, looking for short term, like intraday level shorts. But ultimately, if I'm looking for big moves, or if I'm looking to hold like for a day, looking for longs. Same with ES. And as far as gold, if I had a bias, gold, possibly I would look for longs actually. Well, intraday, I wouldn't even do nothing with gold. I'm not looking for nothing. I'm looking to sit back with gold and see what it does. Yeah. So that's my take on gold. So as far as everything else, if I had a bias, you could look at oil. Not really trade. Oil is very, very efficient. So those who trade oil, I would totally look for oil to reach this level here. Right, and that's just a quick what I would see. This isn't a thorough breakdown at all. We got silver. Silver's been looking real crazy. So of course silver, yeah, I would sit back. Just the metals, I would sit back and let it play out. Everything else, I would not assume but expect it to do something towards a certain level, a bias. So yeah, that's it. Hope you enjoy, and I'll see you next time. Peace.